Hello and good morning, everybody. It is April 7th, 2020, and this is the Real Estate Investment Group market update for this week. We are sitting still in the middle of a massive coronavirus COVID-19 pandemic. Most cities, states have lockdown or stay-at-home provisions in action, and I'm getting a lot of questions about what's going on. We're still really busy, seeing a lot of investor traffic coming in through our network, and there's a lot of money out there, a lot of money right now looking to buy things, and I'll get into some of the details of those here in just a second. I'm going to consult my notes. So I'm going to start local, and I'll probably for this focus a little bit more on local than on other aspects, but so here in Nevada, despite the shutdown orders from Governor Sisolak, construction still continues across Nevada. And construction and development were both deemed as essential by the government, and that includes home building as well, new home building. Although owner-occupied properties that were set to close in March did raise the volume, the price. Average price again, it went up to $319, but those figures are, I don't think you can really rely on them. It did show that we were in a crazy bull market for prices of homes going into this COVID-19, and it shows with the closed properties in March that it pushed up, I think, almost 10 grand or so, right about 10 grand, and that was pretty spectacular. We were really on a roll going into it. Now, the real truth, we'll see what the numbers for April are when those numbers come out, and then we can really kind of see where the owner-occupied market is, and then we can make some comments about the investor market there. But right now, development is really huge, and us as an investment group, we're seeing most of our traffic coming from investment groups and individuals and family offices that are looking for a place to put their money. And we just happen to have a lot of projects that are very interesting, that check a lot of boxes on what investors are looking for right now based on anything that's available in the market. So we're seeing a lot of traffic on that, but just generally speaking, there's billions and billions and billions of dollars in projects here in Las Vegas that are underway, and they continue. Nothing's getting shut down, nothing's getting stopped. Kudos to all the construction companies out there that are building these projects and taking this COVID-19 seriously and making all the provisions that they need for their employees to continue to work. I mean, that's a massive undertaking when you have hundreds and hundreds of people, especially people like the Allegiant Stadium that are undertaking this monumental task just in any normal environment, and then add to that a pandemic, and boy oh boy, I give a lot of credit to all the workers there and all the managers and the people who are managing and directing that project, as well as every other construction project here in town. We've got apartment complexes going up. This is the most understated market and the underestimated market, an underserved market. From our research, those of you that have been following us for years now know that we mentioned this about 5 years ago, that the multifamily rental model was the most underserved, multifamily in general, the most underserved market from our research. Most since 1985 was the last time we really saw like a big burst. And that lasted a few years, but even that, they didn't build a lot. So now we're seeing a lot of it actually, and a lot of it is coming from California and New York, some from Texas and some from Florida, are the big players that we've noticed so far. Lots of apartments. They're still building hotels. They're building warehouses. We're seeing a lot of industrial projects that are coming in to support all this growth that was happening. So there's really from the people that have big money in the game and in the markets, specifically the real estate markets, there's a major anticipation that things will get back to some state of normal in so much as the economy is concerned, because development is going on. I mean, new home sites are probably the only construction that has quelled. They're still finishing their commitments, so they are still building. They're not seeing a huge amount of new starts, and that makes complete sense. But they had a lot under contract, and new home building going into this was popping. And that's the only thing really set back, and that makes perfect sense. That's the right move for home builders. Don't put up standing inventory that's going to sit there and just take up carrying costs and get old with nobody in it. Wait until you have it. So that's the way they've always run their business. So that's really them saying they're not doing a whole ton of building is not that big of a surprise. But the football stadium, all these other things that are going up here in town, I mean, they're still going. Resort workers, Resort Worlds International, which is that huge hotel casino that is on the site of the previous Stardust Hotel and Casino, right next to Sky. And if anybody's looking for a phenomenal high-rise condo investment, the Sky Las Vegas is outstanding. We happen to know all of the people over there. It's a phone call away, so if anybody's interested, definitely call us. Show you some very cool stuff. But Resort World in general is just amazing. The property is unbelievable, and they still have 2,200 workers on site. And I think they've had a dozen COVID cases. And so the one quote that kind of caught me, they had interviewed somebody that was working on site at the Resort World, and they were asked to be anonymous. They didn't want to lose their job. And I know on sites like this, it's very, very looked down upon for anybody to break the silence. But somebody did, and this is the comment that said out. It said, "People are nervous. You can feel it in the air." I think that applies pretty much everywhere. I can imagine in a construction site, especially a big one like the Resort Worlds International, where you've got 2,200 workers on site still, and that's probably pared down a little bit. They're already behind on schedule too, so I mean, like the pressure's probably on from the shareholders and the investors and the preferred shareholders and the A, B, and C round investors on that and more. I'm sure the pressure's on, but they're plugging along, and regardless of how you feel about it, if it's right or wrong, it is happening. As I mentioned, the home builders are taking a slightly different approach, and I think it fits their business model perfectly. I don't think their stocks are going to go anywhere, Q3, Q2, but I don't think anybody's stocks really, maybe Amazon. I don't even know. I don't even think Amazon has been able to ramp up to meet their demand yet, but here's something interesting, though, also in this space that I found through our network, and that is that Del Webb is building its first projects, plural, in southern Nevada in over 10 years, and they're still continuing to build. That's pretty amazing. I'm going to sneeze here in a second. Sorry, the pollen's blowing. Excuse me. Again, I'm going to touch back on what I just said earlier, just to really, ring this bell and speak about how important it is. But apartment complexes are going to be huge going forward. There's a lot of them being built. It's a lot of stuff coming in from out of town. These companies that already own. These are not like first-time builders. These are people expanding into our market in a big way. They're putting up hundreds and hundreds of doors in conglomerate. Thousands and tens of thousands of doors are going up here. They're still, if you watched any of our stuff, or if you were part of our last forum, which happened in Q4 of last year, 2019, and if you want to be a part of our next upcoming forum, which is going to be an online forum, please drop me a note and tell me you want me to put you on the list. But apartment complexes are going to be huge going forward. It proves the amount of people that are going to be here working is continuing to rise, and people that are coming from other places that are going to rent, relocate here, get themselves settled with renting, and then once their job is set, they're going to buy. This is going to fuel home sales, owner-occupieds, 2 to 3 years from now, like crazy, and that'll be right around the same time that we probably get a vaccine that's been in place for 12 months, and things are finally starting to get back to normal. That's our forecast right now, is that it's going to be 2 to 3 years to get back to any sense of normal that we knew just 2 months ago. There's a lot of players I mentioned from Cali and Texas that are representing here. This next one, the median home price was $307 2 weeks ago, and then after the March data came out, it was $319. But again, I don't think that number is anything else that you could build on. I think that's a short-term peak, or actually more of a mid-term peak. I don't think you're going to see the prices of the middle of the market, anything that's under a jumbo loan limit. I don't think you're going to see any price appreciation in that. You are going to see price appreciation in properties that are over the jumbo loan limit, so like 600, 700, 800 million. A lot of $1 million houses are cheap right now, and those prices are going to go up. They're going to continue to go up. They've been slowly going up. Days in the market is long because the amount of people that are able to afford a house like that is a lot smaller than houses that are in the middle of the market that can get loans. A lot of these, if they are a jumbo loan, that's great, but most of them are cash. Lots and lots of cash in the market in the $1 million house range. If you are thinking about buying a $1 million house, a house in the $1 million range, now is the perfect time to buy it. These prices are going to go crazy once people are get back moving again. We still had all this mass exodus coming out of so many states like California that were moving here, and they were buying a house that was worth, their house was worth. They're buying the same house in Las Vegas for like 70% of what they owned in other places, and then they got that 30% extra that's now turned into just equity. So lots and lots of that's not going to stop. I mean, the people that have $1 million and want to move, they're going to continue to move. Investors are going to continue to buy properties. We're seeing it. We're busier than we can handle. It's pretty amazing. Our network is growing like crazy because we're the only people that can move money. And I'll talk about that too. Anyways, media generally are spinning bad, in my opinion. I don't know if this is hashtag fake news or if it's just hashtag exaggerated news. I think people, the scare, the fear tactic, and the fact that there's now robo writers that are in the online news space. So, and I'm reading a lot of them because I could tell by their grammar that they're made by robots. Definitely not English speakers, but a lot of the media is getting out there and people are still listening to it, and generally it's putting a bad spin on things. They're calling for a 1.1% drop in home values in general, and real estate. It includes commercial as well in general in 2020. But there's a lot of things to dissect on that piece of information that I'm sure a lot of you have heard. So yeah, it might drop 1.1% in 2020, but let's talk about the last 2 years where we've been leading the market in increases. It's going to drop from the increase that we've already started seeing, which I told you right now is really high. And then, it's still really high, 309. I mean, so we might drop 1.1%. What is that, 30 grand? You're going to see, 285, which is where we were going into 2020. So I don't think necessarily that that this is bad news. I think this is poorly spun news. And to be honest with you, a 1.1% drop in prices in a town that was, on fire, growing, is probably going to end up, when we look back at this a couple months from now, going to be beating the market across the country as well. Less bad, I think, is what they used to say back in 2008 with the housing crisis. It was less bad news, and I think that's actually going to apply here. So, I mean, as the news is calling this bad, I think this is great news. I think this is confirmation that we've got a tremendous amount of activity still going on here in Las Vegas, despite the fact that the casinos, which are major revenue generators for the town, in so many different aspects of it, are shut down. And yet we still have all of this widespread commitment to developing here on all fronts. Prices are holding. I did want to say Fannie and Freddie, surprisingly, in this environment that we're in, raised their limits again. Fannie, Freddie, and FHA. I'm going to talk about Fannie and FHA. Almost a 1% increase to $510,400 for a jumbo loan limit. That is up from 2019's $484,350 limit. I mean, to raise a limit in this environment, it speaks volumes about what the true market values are that are just waiting on the sidelines or that are still pumping behind the scenes that news isn't covering. For Fannie Mae and FHA to go up, listen to this, in Nevada, Clark County, in the state of Nevada and Clark County, $486,450 for an FHA loan. VA loans are huge too, but listen to this. In Orange County, for example, FHA loans are $766,000 for an FHA loan. They'll go up to. That proves how strong our economy is. I mean, unless they come back and drop these next month after the housing numbers come out, and even if they did, they would have to drop them below the 2019 numbers in order for this to have any real negative impact, in my opinion. This is just learning to read the numbers, and I've been doing this now for 23 years, and I've seen this happen before. So I'm using these numbers, Fannie Mae and FHA, as what I would call the National Housing Barometer to determine what the average price of homes is currently going to be going forward. I think this is a leading indicator. I mean, they were up. FHA was up from $679, $650 last year. And then the most important part about it is not the upper limit that got changed; it's the lower limit that got raised. They raised it from $294,515 to $314,827, almost 1% across the board in all of these rises, a 1% increase. I'm making a point of it because if you don't know, now you know. This is an incredibly useful statistic and very powerful in its numbers. I'm going to revisit this too. Luxury properties, which is anything over those jumbo loan limits that I just said, are up. Very busy in this market. You're seeing a lot of cash come in. I mean, you're able to get a 500 and for 515,000, you're going to get about 3,200 to 3,800 square feet in a really nice area. And the house is going to look great, and it's not going to be, a 1950s house. It's going to be, an 80s, 89 and above house, built in 1989 and above. Probably going to look really nice. It's amazing, and that's the low end. The top end, I mean, properties that you would pay $3 to $5 million for, 200 miles away in Los Angeles, you're going to pick up for, $1.3 million, $1.2 million. Amazing, the markets. So nationally, now to get back to the development, we're seeing a lot of interest in projects that are going around all around the country. We're seeing things nationwide. Our investor network now, and the list of projects that we have on the table for investment is growing, and they're all over the country right now. Nobody's able to lend money or to find money or find equity or anything like that, and we are finding it. So development projects have been coming to the Real Estate Investment Group, the REIG, and Posnerland like crazy. So I do want to say how it is a very underestimated part of our market, and to see this kind of interest in development just continues to lend strength to the underpinnings of our market, the fundamentals, the technicals that are getting obliterated right now because of the pandemic. But the fundamentals and the underlying principles of the market, I believe real estate is still the safest investment. I think it's the best place to put your money for growth. I think there's no better time if you are an owner occupied. If you can get a loan, and if you have people that you're needing to talk to get a loan, I've got some very creative people that I can introduce you to that are lender contacts of ours who I know are doing deals and who I know are turning money right now. If you can afford to buy a house right now, go buy one. Buy one before this COVID virus thing is over. If you need some help, call me. But just looking around in everywhere when you're driving around, it's a great time to own a house. I think values are this is a great buying opportunity. If this was the stock market, this would be a great buying opportunity. You'd see Kramer putting out buy alerts on houses. I think commercial is also tremendously undervalued. There's a lot of cash in the market, which is keeping it real healthy. People are still buying properties because these properties take a while to go and to fix up, and some of them take 6 months to get ready. So the gamble is you're going to buy it, and you're still going to have 6 months no matter what. It looks pretty good for the COVID to be back to some sense of normalcy by that time when you're putting the property back on the market, Q3, end of Q3, Q4, all the way into Q1 2021. So commercial properties are being bought up like crazy, and because construction is considered essential, you can still get working. It's a pretty cool environment right now, and we've got some really interesting projects on the table. Thanks for joining me for the update. If anybody has any questions, please feel free to post in the comments below or just reach out to me. Contact information is 702-805-2720. You can text me there. You can also send me an email to Gio, Gio at reiglv.com. Again, Gio at reiglv.com. Thanks for joining me today. I'll be back as soon as I get another update with some relevant information. Thanks for joining us. Thanks for being members and fans of the REIG. We're proud to have you.